Right. Okay, so I think I'm going to go ahead and get started. Thank you so much for joining me tonight. My name is DeAnna Grant, aka Tax Boss Lady. I am a tax advisor, tax accountant located in Chicago, Illinois. My business, I'm the CEO of Grants Financial Services. We are a tax and accounting advisory company. We work with pre-scaling entrepreneurs, scaling entrepreneurs. That means entrepreneurs going from $500,000 to their first 7 figures. We also implement tax strategies, solutions, and planning so that you can save some tax dollars. Now, okay, so I'm going to get started with my presentation. So let me make sure I'm recording. I have my screen share. Yes. All right. Present. Okay. Now let me know if someone could let me know in the chat if you could see my screen, because I need to make sure you can see my screen. So can everyone see my screen? Yes. Thank you, Jackie. Thank you, Anita. Awesome. Now, if you are ready to learn some nuggets, like to learn some nuggets on how you can save, how can you be like the 1%ers and save tax dollars, please type yes in the chat. So yes is Y-E-S double sign. Yes, yes, Jackie, ready. Thank you so much. So you type Y-E-S with some dollar signs, because that's when we're talking about saving some money. And we're talking about making some money. Thanks, Patrice. Hey, yes, Jackie. Hey, Anita. Awesome. Okay. All right. So now I am ready to get started. Now, I'm hoping that I pray that I went ahead and make sure that I am recording. I pray I'm recording. Okay. So I'm going to get started. So today we're going to talk about the 7 tax strategies to save millions on tax dollars. Well, at least thousands, right? And that's what we're going to talk about today. So who am I? My name is DeAnna Grant, aka Tax Boss Lady. Like I said a little bit earlier, I'm the CEO and founder of Grants Financial Services. My mission and Grants Financial mission is to educate and empower women, entrepreneurs, and people of color to get to their first million. I want to see how many people I can get to 7 figures. I would like to get 10 people to 7 figures in the 2021 year. If that's you, give me another yes in the chat. But I would like to educate and empower entrepreneurs about their financial statements and their taxes so that they can create wealth, so that we can make a difference in our lives, in our community, in our businesses, in our families, and create generational wealth, because that's what it is. We need to, the money that we make as, women of color, people of color, we need to start learning how to keep. We need to learn how to keep, save, and multiply so we have some for the next generation. And that's what my mission is, sincerely. And so our other mission is helping clients achieve financial success. I want every client working with me to get to their level of success. And of course, like I said, I want 10 people to join me to this 7 figures, but whatever that level of success is, there's no pressure. It could be to your first 6 figures. It could be to $250,000. It could be to $10 million. It could be 30. Whatever your level of success, I can help you achieve your financial success by offering tax strategy, tax planning, and also a little bit of financial coaching. So you will work with me up close and personal. We'll get up close and get comfortable with our financial numbers, not uncomfortable. Okay, so who else am I? I'm the owner of a multiple 6-figure tax business, a financial coach, speaker on tax topics, cash flow, wealth building, financial literacy for underserved communities. I help 6 to 7 figure business owners save an average of 10 to 30K. And tonight we're going to go over an example. I'm going to show you exactly how I do it. So I'm so super excited. What sets me apart from other, I'll say, tax advisors is that, honestly, for my career, and I've been doing this for 20 years, honestly, when I came out of school, when I graduated from college, I started working at a small firm. So this firm actually is similar to my firm that I have today. And I've worked with small businesses from, like I said, their first 6 figures to multiple 6 figures to 7 figure and beyond. And instead of me working at Anderson Consultant or Deloitte and kind of working on like McDonald's books, I've always been the accountant for a small business. So I understand a small business needs, their sales tax, their payroll returns, their pain points, everything that moves them. And also now I am a small business owner, so I really understand the needs of a small business. And I also understand the mindset of a small business owner and how you should think differently. Today, with our subject matter, I'm going to challenge you to think differently. I need you to think differently about wealth building. So let's get started. Who else am I? I'm a mother. Like, I'm an entrepreneur. I'm a mother. That's a copy. There's my tax office right there. I'm located in Chicago. But however, we're virtual. We handle entrepreneurs in all 50 states because QuickBooks Online is virtual. Actually, the tax return and most of the tax planning deals with the federal because your income flows to the state. So most of the tax planning deals with the federal, and the federal is the same for all 50 states. I'm a mother. I want to quickly say how I got started with my business. 3 things happened to me all in the same month. Back when I started my business over 10 years ago now, I lost my job. I was married at the time. My ex-husband, he left me. He left me. I lost my job. I got fired from a job. My ex-husband left me. And then my dad passed away. All of those things happened to me all within the same month. I felt like I had nothing else to lose. And so I felt like I had nothing else to lose. I was like, you know what? I'm going to start a business. Because had any of those things not happened, my comfort zone would have been met. And my husband, if I still kept my marriage, had I still kept my W-2 job, and if my dad was still alive, I probably would have still been on I would say the corporate handcuffs. But at the end of the day, it inspired me to start my business. I started at my dining room table, processing maybe 10 tax returns of the 10 friends who would ask me to do the taxes. Now our firm represents over 400 individual taxes annually, as well as we work with about 20 entrepreneurs monthly. And so, like I said, I'm trying to get 10 people to 7 figures next year. I'm claiming that. But today we're going to talk about the 7 tax strategies of the 1% that will save you thousands. Now, I know I'm saying millions, but depending on your income situation, we definitely can save thousands. Now, who wants to save thousands? I know somebody wants to save some thousands. I don't mind saving some thousands because I don't want to give the money to the IRS. I want to keep it in my pocket. And so my quote of the evening is, fail to plan, plan to fail. That's my quote. Fail to plan, plan to fail. Now, let's get over today. So today's presentation, we're going to cover choice of entity. A lot of entrepreneurs don't understand what entity are they. Are you an S Corp, am I C Corp, am I LLC, am I sole proprietor? What is the difference and what does that mean? We're going to discuss the 7 tax strategies that will save you thousands. We're actually going to do a case study. I'm super excited about this. We're going to do a case study and I'm going to show you how I help an entrepreneur save 10 to 30K in taxes. So I'm super excited about that. We're going to talk about how to keep the IRS out of your business because it's very important. You don't want them all in, you don't want them being nosy all in your business. And we need to discuss loyalty does not save you tax dollars. It just really doesn't. Okay, let's get into it. Okay, so we want to talk about the different choices of entities. Choice of entity is basically, I want to say, your corporate structure or no structure. Now, when you're first starting your business, you can just go get started. You can go start make money tomorrow. And you can start off as a sole proprietorship. You do not need to incorporate. A lot of business owners start off as a sole proprietorship. But then there's something called incorporating. So what that is, that's with your state. You actually make your business a real business and you incorporate with your state. And you also get an EIN number with the IRS. So the EIN number is like a social security number. So now it's like you have a new baby. Your business. And choice of entity, there are different choices. So sole proprietor means that you have not incorporated. then you can become an LLC. And if you are the only owner of that business, you are a single member LLC. Then you could form a partnership with your state. I skipped over one because we're going to go back to S Corp. You could form a partnership, and a partnership is typically an LLC with 2 or more individuals in a partnership. That typically is a partnership. And then there is the corporate, a corporation. So a corporation is a C Corp, and you would incorporate with your Secretary of State. Now, I want to go back to Part S Corp. A lot of business owners don't understand this. An S Corp is a tax designation. So what that means is it's an IRS only transaction. So basically, with the Secretary of State in your state, you would choose LLC or probably a C Corp. And what happens is you can fill out Form 2553 and you can elect to become an S Corp. So with the Secretary of State, you will still be an LLC. You can still be a C Corp. You would still be a partnership. But the S Corp is where you're electing to be an S Corp. And I just wanted to go over the tax form. Sole proprietor, you do a 1040. Single member LLCs, a lot of business owners don't know this. With a single member LLC, you actually file your taxes on your personal tax return. Your business is included on your personal tax return. There's like a quote that I don't know if it's over 100,000 business owners are single member LLCs, and they're missing out on this one opportunity, the S Corp strategy. You're overpaying as a single member LLC. You can overpay, but I would say there's levels to this. So if your business, my key number is 25,000 or more in profit, I feel like the S Corp strategy is the right one for you. Then there's the partnership, and then there's the corporate, a corporation. And sometimes there's levels to business, right? So you start off as a sole proprietor. Then I believe that everyone should become an LLC. An LLC is a disregarded entity. And as an LLC, as a tax advisor, I actually could switch your business to an S Corp. I could make you a C Corp. I could have you taxed as a C Corp. I could have you taxed as an S Corp, or you can remain a single member LLC. So the single member, the LLC gives you enough leverage, where as we're growing, as the business is growing in profits, because remember, profits are everything. When the business is growing in profits, we can actually elect a different tax status as a tax strategy. All right. And I feel like the wealth building strategy, because there's levels to this, it's actually having a few organizations. So you would have a C Corp, an S Corp, and a not-for-profit. So yeah, thank you. Someone's at my business store this late. So anyways, okay. This guy. All right, this guy. So sorry, someone's at my front door. I need to not get distracted. But this guy, so we keep hearing about, so we know that Trump, we prayed it. I don't hope he doesn't win today. No. Okay. Sorry, excuse me. Someone's trying to deliver some food. My apologies. But so this guy, he paid $750 in tax, and we're wondering why. And so that's kind of like that's tax strategy. I want to say with Trump, here's the numbers right here. So basically, maybe he made $7 million in income, and then he had about $7 million in general business credits. Now, further in the presentation, we're going to go over what is a tax credit. So a tax credit reduces your tax dollar for dollar. And these 1%ers, they know about all of these general business tax credits. There's over 30 general business tax credits, and it's Form 3800. It's IRS Form 3800. And these are some general business tax credits. There's several. We know that if you invest in oil, those are some really good tax credits when you have the ability to invest in oil, because typically when you invest in oil, it's like a dollar for dollar write-off. So, but let's get into our more further into the presentation. Now I have this here. I call this a love note. This for me is kind of like an example of when entrepreneurs decide to do their taxes themselves. As you start growing your business and you have, I want to say 6 figures, multiple 6 figures of income, I do not think that you should DIY your business taxes anymore. It's time for strategy. It's time for you to do tax planning, and it is time for strategy. You do not want one of these love notes. There, I call them little love notes from the IRS, where you would owe $24,000 because what? You failed to plan to fail. So now I'm going to educate you on what you can do to plan out your taxes so that you don't have this large tax bill, because you know it's the middle class that pays all the taxes. However, if you have the right tax professional, the right tax advisor, you know, I can help you out. We can help you save some tax dollars. Now, I'm going to get into my 7 strategies. All right, strategy number 1. So I have a new system called my wealth building formula, wealth building method. And it actually includes 5 strategies. So 5 of my 7 are included in my tax strategies. These are the tax strategies that can help you save thousands of dollars. And this is how I work with a customer. When I have a customer and I'm doing a tax plan, I go through all of these 7 strategies thoroughly to get you a tax plan. And that is how I help you save 10 to 30K in taxes. And we start off with, I ask you what your goals are. I'm like, well, what are your personal goals? Because that could include, do you want to buy a home? Are you trying to buy a commercial building? Are our children old enough now where they're going to college next year? There's a lot of different variables in the strategy because I need to include your personal life. So I ask you about what's going on in your personal life. What are your financial goals personally for the next 1 to 2 years? And what are your business goals? Come on, 7 figures. But the first strategy is I go over your tax, and I also ask you for a copy. If you're not one of my trusted clients, I ask you for a copy of your 2 years prior tax return, because I kind of want to see what's going on, what the income was, and it just helps me to analyze your situation. But we go over tax deductions. Good tax deductions are your home office, your traveling, meals, not entertainment, meals. Entertainment is no longer a deduction. Your auto, your car, should you lease, should you purchase? Your cost of goods sold, your employees, your contractors. I'm going to pause a moment to see what's going on in the chat. Oh, okay. Awesome. Yes. Thank you, Shaniqua, for joining me. Thank you. Thank you. Okay. So the next strategy is tax credits. What is a tax credit? A tax credit is a dollar for dollar write-off. So meaning if you made $10,000 and just say your tax rate is 10%, that means you would owe $1,000 in taxes. A tax credit reduces your taxes dollar for dollar. So some examples of tax credits are the education tax credit, your child tax credit. We all heard of the earned income tax credit. That's where, like, just say if your income was lower in a year and you have children, there is something called the earned income tax credit. And that is actually a refundable tax credit. So it gives you money. It gives you money. There is the work opportunity tax credit. This is for people that own a business and have employees. There is the empowerment zone tax credit. And that's maybe for people that are going into real estate and just doing a little bit more high level transactions. But then, like I said, there is a general tax credit form. It's IRS form 3800, and it lists like over 50 tax credits because there's lots of tax credits, but you have to know about them. And you have to be in a certain situation, certain scenario for it to be applicable to you. But the third tax strategy is a shifting income strategy. Now, I know I don't want to say ladies, but I know you guys have heard of hiring your child. This is one of the best tax strategies. And what happens is you're taking income from maybe just say you make 6 figures, you're taking income from your higher tax bracket, where if you make 6 figures, you may be taxed at 30%, and you shifted to your child, and the child, whatever you pay the child, say you pay the child $10,000. Well, $100,000, your money is taxed at 30%. Well, your child who only made, where you paid them $10,000, they're taxed at probably no tax, because up to the first $12,200 paid to the child, there's actually no taxes paid. There's actually no tax that you would pay when you pay your child $12,200. So not only does your business get a tax write-off, tax deduction, but you have taken income from a 30% tax bracket and shifted it down to a lower tax bracket. That's what shifting income. And the S Corp tax strategy is actually a shifting income tax strategy. Because what happens is, instead of paying all of the FICA Medicare tax on our basically like payroll compensation, we save FICA and Medicare tax on some of our income utilizing the S Corp tax strategy. Tax strategy number 4, retirement deduction. Yes, I want part of the wealth building. Part of wealth building is putting money away for the future, having some money for retirement. So that includes solo 401ks, SEP IRAs, self-directed IRAs, like if you're in real estate, or just say you have a professional service business, and you want to take your retirement money and instead of investing it in the stock market, you want to invest it in real estate. Well, you can set up this vehicle called self-directed IRA, and it's your business gets a retirement deduction, but then you have the ability to self-direct those funds and purchase real estate and etc. So that is a tax strategy, and this is a tax strategy that saves you thousands. Okay, so the next thing is the 5th tax strategy is tax elimination. So you ask, what is that? Well, tax elimination is tax elimination means we have eliminated the tax, meaning there is no tax we're going to pay. So there are products, and I call them like financial products. They're insurance based, where you put your money that you already been taxed on, you put it in this insurance product, and it's able to grow tax free. So there's a product called the IUL, which is an insurance product, but you can put your money like in an IUL, and it's able to grow tax free. And how do you get the money out? So then you can borrow from the insurance plan. And essentially, when this money grows, we are eliminating the tax on that extra money. You can also set up a pension plan. If your business, I want to say specifically, you're scaling $500,000 to whatever, $500,000 to 7 figures, and you have a very profitable business, we would set up a defined benefit plan, a pension plan, where we could put in, you have to get an actuary to calculate how much you can put in, but this you can have like $50,000, $60,000. You can put money away in a pension plan for your business. So you can have your own pension plan in your business. Tax strategy number 6, having a financial management system. Why do I say this? Because when you have a business and you don't know what your numbers are from day to day, when you're not keeping track of your numbers and you have no financial management system, that is QuickBooks. That's QuickBooks. It's very difficult for me to do a tax plan for you when you don't have any books and records. If you don't, or your books and records aren't accurate. I'm charging people, if you're trying to make money, I'm like, if you are not good at the bookkeeping and you're not consistent and you're not going to be consistent, you need to delegate that job. You need to delegate that role. Let someone give you books and records. We will not in 2021 manage our businesses without knowing the numbers. You're in business to make money. You need to track your money. You need to know the income and the expense so you can now make educated decisions about your spending. You want to know what's going on in your business. Okay, so I'm going to go to the chat. Right. Okay, yes. All right. So the next strategy is hire the right tax professional. I hate to put the shameless plug, but my quote is, loyalty does not save you tax dollars. So what happens is when you start your business, I'm going to just put H&R Block under. I'm going to put H&R Block under the bus today. Sorry. But just say you used to go to H&R Block and get your taxes done. And that's because you were a sole proprietor. And at that time, whoever you were seeing, they were, I don't want to say not competent, but they were able to process your simple return. Well, now you have an S Corp. You are now making $250,000. You're making $250,000. You're making $500,000. You are scaling your business to 7 figures. Well, now you need to work with a business tax accountant, such as Grants Financial, but you need to work with the right tax professional. You need to work with someone who is used to working with business owners, who understands the needs of a business owners, who knows how to save you tax dollars, who understands all the tax deductions, all the tax credits, all of these tax strategies, where they understand these tax strategies, and they are utilizing a proactive approach to your account. You're not just a number, you're not just one of the tax returns, but they're actually helping you to save tax dollars. So that's my 7th strategy: hire the right tax professional. And then I just had to put this out here, like, loyalty doesn't save you tax dollars. And what that means is when you stick with that same person that when you started your business, they were the right professional for you at the time. But now that you scaled, you got an S Corp, you have real estate, you have more complicated needs, you need to move to the right professional. But this always trips me up. I get a kick out of this. Like, why do we take advice from our friends? This is not just about relationships, because even that can be funny too. Like, you take advice from the girlfriend that doesn't even have a relationship. I don't know. But the same thing with taxes. I find people, like, they're in the beauty salon, like, talking about their taxes with someone who, one, doesn't even have the same type of business you have. They don't even have the same kind of activity you have. Like, your business is a 6-figure business. Their business is a no-figure business, but they're giving you advice. No, we don't want to take advice from friends. And I'm like, why? All right. So I want to introduce you ladies to tax planning. And what does that look like? And being proactive with your taxes. And not so when you do tax planning is not about just the preparation that happens, like, we have from March and April. Tax planning is when you're growing your business, when you are building wealth, you need to have a relationship with your tax advisor that is not just once a year. It's actually at least twice a year, and maybe more. Because like I told you, I work with clients monthly, and I am coaching my clients to get to their next revenue point. We look at their numbers on a monthly basis, and I help them make decisions to increase their sales, to hire more people. I just take my 20 years of experience of working with business owners, and I help coach them to get to more, or I help them get organized. There's people, some of my clients are rainmakers. Like, that means they make it rain. They make it rain, but they don't keep any of it. So they make a lot of money, but don't keep it, which is not good. So I want to introduce you to tax planning and some different strategies. So there's something called the accountable plan. There is the Augusta loophole. There's the S Corp strategy. There's hiring your children. There's retirement plans, and there's insurance wealth building. I wanted to mention some of these. I'm going to kind of briefly discuss an accountable plan and the Augusta loophole. So the accountable plan is when you have an S Corp, and I don't know if everyone remembers when we had a corporate job, like we used to work for a corporate job, and then our corporate job set budgets, or what happened is we spent money that needed to be reimbursed. So we spent money personally. So maybe we paid for parking, we paid for travel out of our own bank account, we paid for a conference. And then you had like this expense reimbursement form, and you had to turn it into your employer to get your money back. Well, that's what an accountable plan is for you. You should have, so with the S Corp, it's those personal expenses. This is how we protect you from the IRS. It's those personal expenses like the travel, your auto, your home office that you have within your S Corp entity that now you're able to, with an accountable plan, we're able to implement the accountable plan and actually get additional write-offs. So additional tax deduction is part of one of those 7 tax strategies, which helps us save tax dollars. And in a moment, I'm going to show you exactly what that looks like. Now, the Augusta loophole, this has been around for a while, and how this works now, it's COVID, so it's a little bit different, but this is actually an awesome strategy. So you know how, like, if you're having an event, if you're having a party for your employees, well, you'll host it in your home. But what you need to do is you need to go and research how much would the room at the Hyatt cost? How much would renting out Bureau Bar cost? You get like 3 or 4 quotes on what does it cost to host your Christmas party, annual corporate planning event, your, I don't know, whatever kind of event you want to have. And you have to go and research 3 venues that would charge you for that. You get 3 different quotes, and actually up to 14 days, you can utilize your home, and it's a tax write-off. So what happens is, just say I'm having, if I would go get the Bureau Bar, it would cost me $1,000. Well, now I can have that same event in my home, and using this loophole, if I have like 3 or 4 of these events a year, that's like $4,000 additional dollars that I get to write off on my business by utilizing this loophole. So instead of me giving that money to Bureau Bar, although I love Bureau Bar, then I could use my home and host these events, host my employees, and save the money, and my business gets a tax write-off. So this is an awesome strategy, but it's COVID right now, so it's going to be a little bit more difficult and challenging to host events, but prayerfully 2021, we'll be back to doing events in our home, more events in our home. The S Corp tax strategy, hiring your children, retirement plans, and insurance wealth building. Okay, so now we are going to go over a case study. We're going to go over a case study. I actually have a poll for you guys, for you ladies. Let's see, how do I get, let me stop this. I want to give you, oh, here we go. All right. Oh, I see. I put the poll question out already. So I asked, how long have you been in business? So 88% have been in business 5 or less years. 13%, 5 to 10 years, and 0 for 10 years. I guess I need to explain the S Corp strategy. So I asked, do you understand the S Corp strategy? And 100% said no. So we're about to go over this. And then the last question was, do you feel that your current account is providing sufficient solutions and strategy to create tax saving? 100% said no. Okay, so I may be getting some new customers. All right, so now we're actually going to do a deeper dive into that S Corp tax strategy, and then I'm going to allow you ladies to ask questions. Okay, so that was the poll. I'm going to share the results. I just shared the poll results with you ladies. And I am now going to go into the S Corp tax strategy. All right, here we go. Here we go in S Corp tax strategy. All right, so with the S Corp, so let's say you have a single member LLC. And so what that will represent this right here, this Schedule C. So if you have a single member LLC, that's the same as utilizing a Schedule C. Okay, versus the S Corp. So S Corp is a tax saving strategy. So let's go over the numbers, ladies. Let's go over the numbers. So what happens in an S Corp, when you have your business as a single member LLC and you have not implemented the S Corp tax strategy, you actually pay something called the self-employment tax. Self-employment tax is FICA and Medicare. You guys remember when you had that W-2 and then you look on the W-2 and then FICA and Medicare take some money? FICA and Medicare. So when you are an entrepreneur, FICA and Medicare does not go anywhere. You still have to pay FICA and Medicare. So FICA and Medicare, i.e. the self-employment tax. But as an entrepreneur, you actually, as an employee, 6.2% is taken out for FICA, 1.45% is taken out for Medicare. When you're an entrepreneur, you take that number and times it by 2. So as an entrepreneur, you have to match your employee, or as a self-employed person, you have to match the FICA and Medicare. So instead of it just being 6.2% and 1.45%, you actually end up paying 15.3% on your $100,000, your 6 figures of income. So when you make $100,000, you pay self-employment tax, plus you actually pay ordinary tax. Ordinary tax is whatever tax rate you're at. In the graduated tax system, and I had a little like Facebook Live about that fair tax, but I'm not going to digress today because that's an Illinois issue. But so the self-employment tax is 15.3% of every dollar that you earn or profit. So in this example, we make 100,000. I'm going to just change it to 50 just so you can see how it will calculate. So on 50,000, it's $7,650 you'll pay in self-employment tax. It's 15.3%. Okay, so let me go back to 100,000. So what happens in the S-Corp strategy is, instead of me, I can utilize this tax savings strategy. So instead of me having a single member LLC, I'm going to elect to become an S-Corp. And it's a tax savings strategy. So instead of me paying 15.3% on the entire $100,000, with an S-Corp strategy, you still have to pay yourself reasonable compensation. So with an S-Corp does not eliminate the self-employment tax, but we can reduce it. So now with the S-Corp strategy, I can elect to pay myself $40,000. Now I still made 100. You see, I still made $100,000, but instead of me paying $15,300 on the entire 100, I now, once I use the S-Corp strategy, I will pay self-employment tax on $40,000, and I'm going to have the other $60,000 flow through to my personal tax return. So essentially, I end up saving $9,180 by implementing this strategy. And I'm just going to play with the numbers a little bit. So just say I had 75,000 of earnings, right? And then now I want to make my salary 25,000. No, 25,000. So this is what I said, the tax strategy that saves you thousands by just being smart enough to elect to go from a single member LLC to an S-Corp. We save $7,650. That's a lot of money. That is a lot of money. And then over 3 years, we saved $22,950. That's a lot of money. Now, this is an example of my tax plan, because I'm a first start off, I'm going to say you should be an S-Corp. Then I want to kind of go over some additional deductions, because I promise to save you thousands, right? Thousands of dollars. So then we go through my wealth building formula. The wealth building formula is tax deductions, tax credits, shifting income strategies. It is retirement deduction, and then tax elimination. All right. So a tax deduction, so further tax deductions would be an example of the accountable plan that I had talked about. And that is where you take your personal expenditures, and we create a plan in our S-Corp, and we're able to write that off. We're able to take our home, and we can take a percentage of our rent or our mortgage, and now we can write it off in our business, kind of like home office, but it's for an S-Corp. So just say we have $5,000 of home office, personal cell phone, home office, and auto mileage reimbursement. Hey, I'm feeling generous. I'm gonna make it $7,500 because you had a session with me. So then we sat down, because also you do not want to just implement strategy. We need the appropriate paperwork to protect our returns from the IRS. So we instituted an accountable plan. All right, we got a little Jimmy. I got a little Tatiana. You saw her beautiful picture at the beginning of the presentation. So I know that a wealth transfer, a wealth strategy is if I pay my child $12,200. Now my child is 14 years old and she can work. So she needs to go to work. The funny thing is she reminded me that there's labor laws. Like this little genius had enough whatever to research. You know, I can only work 3 hours after school, but education is very important. I'm not trying to work her like a slave. However, I'm trying to get that tax strategy. I'm going to pay her all $12,200 because when I get a deduction for my business, and then my daughter will pay no taxes on the $12,200. But there's more to this because you have to follow the correct strategy when you're utilizing the strategy. So I'm trying to keep it simple today. So then retirement, I set up a SEP IRA. So I'm going to put $15,000 for away from my retirement. Then I am the owner of my business. I'm going to set up like a life insurance policy. Remember I was talking about tax elimination? I'm going to set up a life insurance policy for my business. I may do a double executive compensation plan. Just say that's $10,000. And if I'm taxed at a tax rate of 30%, that means for every dollar I make, I pay 30 cents on the dollar. Then these additional deductions that once we sit down and plan, I just found us $44,700 of additional deductions. And that saves you, drum roll please, that saves you an additional $13,410 in taxes. Who wants to pay that tax to the IRS? So in 1 year, that's $21,000 of savings. Then in 3 years, that's $63,000 of savings. And I promise you, I have been doing this for, I've been studying, I actually have the benefit of studying advanced tax strategies I've been studying advanced tax strategies over the last years. So whoever used to work with me like 5 years ago, because I'm here for getting us Black entrepreneurs or entrepreneurs in general to 7 figures. And my business is going to get there as well. And so I had to come up with some tax plan strategies because I need to save myself some money too. But like I said, these strategies, you want to protect your tax return from the IRS. So there's certain rules as you're taking these deductions, but I just wanted to share that with you, ladies, of the potentiality of all of these tax deductions. Now, so I'm going to go back to my slide deck. So we just went over the case study of the S Corp. And I just wanted to remind everyone about like your financial statement. Although I'm the tax boss lady, it's very hard for me to do tax strategy when you do not have good books and records. I need you to have good books and records. You can now work with your accountant, work with our office to actually help you keep your books and records and do financial coaching. But if you don't know your business profits on a monthly basis, how do you know if you're headed in the right direction? If you don't know your monthly expenses, how do you know how much money you can spend on contractors and staff? And if you just don't know your business financials, when I ask you like, well, what's your income? What's your profit? I don't know. We need to think differently. I need my entrepreneurs to grow up in business and we got to move away from hobby and do the things that real businesses do. And that is having a financial system, because knowing your numbers is extremely important, because what you do not know, you cannot grow. And then I just wanted, because this is how people back in the day used to come to us. I'm kind of getting a little bit more, I want to say strict, or yeah, I'm starting to, I will work with you. If you come to me first year and you look like this, because I'm gonna say I have a case right now. Someone dropped off 5 years of taxes. We're doing 5 years of taxes, and they gave us like all these bill full of receipts, and we'll take it and we'll help you organize it and get you caught up. So don't overthink it. If you need to get caught up, you can drop off those receipts. We will help you get caught up, because filing your taxes on time is very important. But I want to say, when you keep your records like this, does that look like order? Does that look like a person that wants to make money, wants to make a lot of money, wants to keep their money? No. So, and why should you keep good books and records? Actually, the IRS says you should keep good books and records. It's actually a requirement of the IRS. It's a requirement when you have a business. It's a rule from the IRS that you have to keep good books and records. If you get audited, it's in their rules that you should keep good books and records. I wanted to go over this example of unorganized versus organized, but honestly, I would like for businesses to have a financial system. Financial system, if you're kind of DIY on the financial system, or you could let Grants Financial help you with your monthly bookkeeping. But these are some systems you can use. You can use QuickBooks Online. You can use FreshBooks. You can use Xero. You can use Expensify, you can use TaxBot. These are some financial systems that can help keep track of your income and expenses and just help you stay organized, because having a financial system and being organized with your finances is business owner success. Business owner success. Okay. Now, if you get a little bit, so as I coach my clients, I'm actually, those clients that are, like I said, my clients are rainmakers. They make a lot of money, but they're having a challenge keeping it because we don't have financial order. We have no strategy. So this is the system that I utilize in my financial coaching program with my entrepreneurs, and working with me. Not only are we going to get to your set financial goal, that's $250,000, $500,000, 7 figures, but we also are going to save money for taxes. We're going to save, we're going to have money to pay our staff, our contractors. We're going to have money for operations. We're going to have a business reserve. A business reserve is COVID happens, and I just need to, every person, like I don't know. I always keep $1, in the little safe, the little girl safe. But the business reserve is like your little girly safe that you keep, and you just have money just in case something happens. We didn't expect COVID, and you just didn't expect COVID. And profit, we want to have businesses that are profitable. It is not really acceptable to consistently have losses. Yes, because you have loss in the first year, but I feel like that's an old wives' tale, because you could start your business and have profit immediately. Just because you started, you do not have to have that. I heard this old tale or something that if you're in business, you have something about 5 years in losses, but we are in business to make money. We need to figure out how can we make money and operate with profit in our businesses. Just want to remind you that accounting is the language of business. You are in business to make money. Profit is everything. And you should know your numbers and then add tax. That's my little catchphrase. And I want to say this is your tax bill without the tax planning strategy that I do. You write the check, IRS, they get all your money, they get all them extra coins, because you have to invest in like your education and invest in the strategy. We went over that example. We saw where you could save $40,000 or more in taxes. That is huge. But when you don't have tax strategy, this is the check you're writing, all of your money. So in conclusion, we talked about tax deductions, tax credits, shifting income strategies, retirement deductions, and tax elimination strategies. I wanted to say, will you save thousands in taxes? And if you want to, you can schedule today. You can go to bit.ly Tax Boss Lady Strategy, and you can schedule your strategy session with me. For all of you that are joining me on this call, my tax planning sessions, they actually start at 9. They actually, to be honest, when you go to my Calendly, you'll see it starts at $9.97, because in all honesty and fairness, this plan that I showed you, to really do that thoroughly, we actually charge 15 to 20% of the tax savings. However, I also want to have a service that someone who I just want to have a service where you could get a strategy, even if you didn't have $2,000, $3,000, but depending on your level of business will be the fees. But for today, anyone, if you book today or book like in the next week or so, I'm offering it for $497. This is the link. It's going to say the know your number strategy. You can also use it as an annual planning strategy, meaning I want to make 6 figures next year. What do I need to do? And we can like do a cash flow plan for you. And so in conclusion, hiring a good accountant. Accounting is the language of business. Financial information helps a business owner to make informed decisions. All successful businesses have an accounting department. Tax planning equals tax savings, which is wealth building. And loyalty does not save you tax dollars. Okay, so now I want to open the floor for Q&A. And this is where I can be found on Facebook at Tax Boss Lady, on Instagram at Tax Boss Lady. And like I said, to schedule the strategy session, it's Tax Boss Lady, is bit.ly Tax Boss Lady strategy. You could schedule with me today for a tax planning, financial planning session. I promise you it's worth the investment. You will, if you're trying to save taxes, you're going to save thousands because we went over the example. Or if you're just trying to plan out your 2021, you want 2021 to be different, you would schedule. All right. So I have a question. Okay, from Jessica Brown. Hi, Jessica. All right. How, and now I open the floor for Q&A. So please ask me questions. But Jessica asked, how and when are business taxes due? And what is a fiscal year? This is a great question. Okay, so I'm going to go over the different choices of entities. If you have a sole proprietor, your taxes are due April 15th. If you are a single member LLC, your taxes are due April 15th. Because a single member LLC, your taxes are filed on your 1040. If you have an S Corp, or a partnership or LLC with 2 or more people, which is a partnership tax return, your taxes are due March 15th. And for S Corps and partnership, when you do not file your taxes on time, there is a $200 per month per member fee, late fee. So it's very important to file the extension or the taxes on time. S Corp and partnership is due March 15th. If you have a C corporation, your taxes are due April 15th. Fiscal year. All right. Actually, that's a tax strategy to utilizing a fiscal year, but I guess I wanted to keep it simple today. But calendar year, so there's calendar year and there's fiscal year. Calendar year is January through December. Fiscal year is when you elect with the IRS to change your year into a different date. So for example, like I just know like a lot of, I want to say education agencies, like maybe you're an education consultant and your school year ends June. So then you could elect where you have a fiscal year in June. So your year is July to June. That's 1 year. Calendar year is January to December. Fiscal year is when you choose a month. You choose whatever month you want. So just say in this example, you choose June. So your year goes from July to June would be your fiscal year. Now that actually is a strategy. If you're making a lot of money, like we got that $500,000, we have 100 to 200,000 of profit, then I'm going to implement a fiscal year strategy, and I'm also going to implement a multiple entity strategy. So I would set up a C Corp for you, create a fiscal year, and I find a way to defer the taxes to another year by implementing fiscal year. Now that's a strategy. I got a lot of strategies for you. So I have it from very simple to more complex, but we have to do tax planning. You have to have a relationship. A responsible business owner that's growing and scaling, they need at minimum, you should speak to your tax advisor twice a year. It's not just tax time. It's tax time. It's probably 3 times a year. Tax time, then maybe June to get a like checkup, check in. And then you also want to do year-end tax planning. Okay. So let me go to the chat. Okay. Thank you, Jessica. Thank you. Does anyone else have any other questions? Because I can answer any questions that you have. If you have any questions. If there's no questions, okay, then I just want to thank everyone for joining me today. Please share this. I actually will be doing the same webinar on November 10th and November 17th. So please, when I post, if you could share with your friends, if you learned anything, I would love to have a testimony. If you have time to give me a testimony on any of my posts, I would sincerely appreciate that. And if you happen to have any further questions, you can book the session, or you could just, DM me, Instagram, Facebook, inbox me, whatever. I really appreciate you giving me your time tonight. Thank you so much.